I'm Deborah Harborough and I'm a private wealth advisor here at Lipman Burgon Partners.
Hello, I'm Paul Burgon. I'm Chief Investment Officer and Managing Partner at Lipman Burgon Partners.
So, Paul, it'd be great to hear about the evolution of Lipman Burgon Partners.
The firm was originally part of an investment bank, and so we were the financial advisory division of investment bank around 12 years ago. We are now an independent partner-owned, sort of progressive professional services firm that really seeks to excel in terms of our institutional portfolio management capability and the family office services that we provide to our clients.
So, Paul, tell us what the top lessons have been on that journey.
I think the key lessons that I've learned over the last decade is that it's not just about portfolio performance. Obviously, portfolio performance is incredibly important, but it tends to be the thing that clients value most is really the responsive nature of the team, working with other members of a support team for us to be there in times of need. And that actually really gives us the greatest pleasure of the jobs that we do, is to get to know our clients and to be there when they really most need us.
What would you say makes your role so unique?
I think coming from working as an advisor for almost 20 years and moving into now sort of running the investment team, I really understand the importance of why you need to be flexible in terms of when you're building client portfolios and why they need to be tailored and personalised. So having that sort of interaction between what could be an ideal sort of model portfolio for a client and then working between the investment and the advice teams tends to deliver really good client outcomes and also binds the teams very closely together.
And now that you're leading the investment team, what would be your asset allocation process?
I think in general, what we try to do is to seek the risk premia that's available in capital markets in the most efficient and cost-effective manner. And probably that's in two aspects. If we look at sort of public markets, we tend to adopt a core satellite approach, where a vast majority of our allocation will be to low-cost core systematic index type strategies. And then we'll have a risk budget that is allocated to satellite managers where there's genuine evidence that they can outperform over time. For private markets, we try to look for evidence where private investment managers have been able to generate very high returns for either capitalizing on complexity or adding operational expertise to a business. And what you tend to find is that the dispersion of returns in private markets is a lot greater than public markets. Finally, really to underpin all of that is we diversify not just across asset classes, but also across risk factors.
And what would you say are the top drivers of performance?
Probably three things. So one is absolutely is investor behavior over the long term. So it is really important to have an investment program that you have confidence in, that is well constructed, but one behavioral mistake can cost you 10 years of returns. So the second part of that is really sort of understanding the nature of markets. So markets are highly volatile. It's very unusual for the stock market to go up every day in an almost sort of straight line. What we get used to is high levels of volatility. So just understanding the nature of markets, they're a long-term investment. And third and finally is just managing the information. So there's a huge amount of information that's daily out there, whether it's on your doctor's sort of television screen or whether it's on sort of social media. A lot of that information is just noise. A small amount is useful in terms of whether it's on interest rates or economic growth. It's all useful and important, but even a very smaller part of that is actually actionable. So I think if you can understand sort of the nature of markets, how they tend to perform over the long term and have confidence in your investment program, it tends to drive very good investor outcomes.
Paul, what would you say is your long-term vision for Lipman Burgon Partners?
So I'm really proud of what we've achieved over the last sort of 10 years. We've had some wonderful feedback from our clients, and we've got a caring and collaborative culture that has continued to deliver some really good outcomes. I think we've got three areas of focus, and it's all around investment. And so one is investment in technology, one is continued investment in people, and one is continued investment in services. And I think if we can balance those three areas right, it's going to be to the benefit of our clients, and it's going to continue to deliver fantastic client outcomes.
No, I agree, and we're really excited about the future. Thanks, Paul.
Thanks very much, Deborah.